Hey, welcome back to Weenie Trades. So in this video, I'm going to be talking about the criteria that I look for when I'm getting into a swing trade. And I'm just going to be giving 3 different examples. They are a little bit different from each other, but hopefully you can learn something new. So let's get right into the video. First swing trade is Google. And what do I look for when I'm looking to get into a swing trade? Well, I'm looking at the higher time frame. I can see that we have a nice good trend upwards, higher highs, higher lows, and just no huge red flags. So the trend is to the upside. So I don't mind swing trading to the long side, or buying at least. I need to be comfortable holding the stock. So Google's a stock that I know. I understand the business model. I usually don't like swing trading too much if I don't at least somewhat understand the stock. So that's what helps me be comfortable on the Google swing trade. And what kind of candles are forming? You know, what kind of candles are forming on the higher time frame? Well, if we look at today's candle on Google, we came right into support. We spiked a lower low, but then we came all the way back up and closed near the highs. That's a bullish pin bar that we might continue higher based off that if Google starts to continue over at least today's high. So those are kind of some factors to look at just up front at face value. But some other factors that I consider when I'm swing trading is, you know, what's your position? You know, where are you in from? So for example, I like to swing trade stocks that I'm up on from the shares. So from buying Google stock, as you know, we take that dip and we move higher. Google, so because I'm up on the position, and I always like to say, okay, a swing trade usually is just a day trade that I don't want to end. I was planning on taking profits at a much higher price, but I was like, well, we're not there yet. Like I'm looking to take profits on Google, maybe at the 2730s area. Maybe we break out, but I usually like to trail Google as we'll talk about in another video. Some other factors to consider are, you know, how in the money are you? So if I'm way up on a position, I generally like to swing trade it if it's not to my full target, which Google, my full target will be through all-time highs over the next coming weeks. But I need Google to get a little bit parabolic and make sure that the SPY doesn't sell off. So because of that, there's overnight risk. What's your position size? You know, if I have my whole account in Google, I'm going to be jittery and not wanting to, I'm going to be a lot more emotional versus if I have smaller share size than I normally do. So how big is your position when you're swing trading? Remember, you're a little bit at the mercy of the market for the overnight session. And then lastly, just have you taken profits on the trade? You know, Google, I was able to day trade it today and get myself a little bit of a profit cushion. That way, you know, if Google does sell off, in my mind, it's like, okay, at least I booked some profits the day prior instead of just going and holding all in. So that's something to also think about on the Google trade and that type of criteria for this type of swing trade. A trade sort of opposite to Google is Coinbase, and I'm short Coinbase through a put option. So if I grab this put vertical over here, buying the 225 put, selling the 220 put, this is a different type of swing trade. As in, okay, Coinbase, you know, it's in a downtrend. It's making lower highs and lower lows. It's had so many opportunities to break out, but has failed to break out. And now we're sequentially making lower highs and lower lows. You know, at least the bleeding has stopped a little bit. But I feel comfortable swing trading short because of the higher time frame downtrend. I also like this type of short trade for a swing trade because it's defined risk. The most I can make, or the most I can lose on this trade is only $123, and I'm selling the put at my profit target. So if Coinbase gets to 220 by the end of the week, okay, that's gonna hit my profit target, and $123 turns into $500 because Coinbase will have dropped at that point. And even if Coinbase doesn't drop, it's used as a hedge. So generally when I'm buying put spreads and stuff like that, it's a sort of a way to neutralize a little bit of my deltas. So whenever we're swing trading, how much positive and negative deltas do you have? If I have too much positive deltas and the market tanks, I'm at a big risk. But if I can remove some of those deltas through negative deltas, hence this put spread through Coinbase, then if the market tanks, I don't lose a lot of money. I still lose a little bit, but I lose less than I would have had I not had that hedge to make some money as stocks drop. So that's an example of shorting and what I'd look for in a swing trade. My third example of a swing trade is Square. And Square stock, if you can see, it's been having a lot of positive news catalysts lately, but I also like how we're in this nice good trend. What we had was a really massive green day the day prior, and today was just a resting doji day. If we look at the higher time frame, the weekly chart, we're attempting to break out. Now we're still at resistance and Square could sell off. However, with the momentum pushing it higher and higher, I think that Square could be a flat top resistance breakout. Now earlier on the day, this is opposite to the Google trade because earlier in the day I actually had to take a stop loss on Google or on Square and had to lose, like $90. Tried to buy Square, stopped out underneath the lows. Oh well, shoulda, coulda, woulda. But Square, nice good move. But that's okay because I'm still eyeing up Square for the potential swing trade. So if we look on the daily time frame, we have this doji candle, and we rested on top of the prior breakout area. So this is the breakout area, and look, we hit it, we reject, we break through it. Now it's holding as support. As long as that holds as support, Square is set to go for all-time highs. And again, I'm comfortable with the stock. I understand the business model. We got higher lows, and we've got this flat top resistance. Most of the time, the flat top resistance breaks out, and this doji candle, maybe we need to go sideways for a little bit longer. That's completely fine. But this is an example where I was not super far up on the position, but I like the position of where Square is at on the daily chart. So that recaps what I look for to get into a swing trade. It was a nice good red to green day from that Google move. But yeah, it's that hopefully that helps you out. Swing trading, it's really important for traders to kind of master. It's kind of like, it's a little bit lower share size, lower risk, wider stop losses, wider take profits. And I think it's a little bit less stressful for most people. And hopefully you learned something new. Thanks for tuning in. See ya.